Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 2 of Scenario Analysis, a guide to smarter planning in uncertain times. For example, are you preparing for shifts in market demand? Planning for regulatory changes? Each objective will shape the scope of your analysis. Ask yourself, what decisions need to be informed by this analysis? Which areas of uncertainty matter most to reaching your goals? By answering these questions, you can set a clear direction and avoid wasting time exploring unnecessary possibilities. A good objective acts like a compass, keeping you aligned throughout the process. Identify key drivers and uncertainties. Once objectives are clear, the next step is identifying the factors driving potential changes. These are your key drivers. They are the variables that will have the biggest impact on your scenarios. Ask yourself, what's shaping the future of this area? These drivers fall into 2 categories: known trends, e.g., population growth, technology adoption, and critical uncertainties, e.g., new regulations, economic shocks. For example, in the energy sector, drivers might include renewable energy adoption, fossil fuel prices, and climate policies. For retail, uncertainties could involve consumer behavior shifts, economic downturns, or supplier disruptions. Once identified, rank these drivers by their importance and uncertainty. The most critical ones will form the foundation of your scenarios. Think of it as identifying the plot twists in a story. They're the factors that could change everything. Develop scenarios. With your key drivers in hand, it's time to create scenarios. Think of each one as a story about a potential future. These stories should be realistic and relevant, not random guesses or extreme outliers. To develop strong scenarios, combine drivers logically. Pair different combinations of trends and uncertainties. For example, what happens if a disruptive technology emerges during a supply chain crisis? Balance optimism and caution. Include best case, worst case, and middle ground scenarios. This ensures you're prepared for a range of possibilities. Keep it simple. Stick to a handful of scenarios, typically 3 to 4, that matter most. Too many can overwhelm decisions. Name your scenarios in a way that sticks. For instance, instead of Scenario 1, use meaningful labels like tech boom or economic squeeze. This makes them easier to communicate and remember. Analyze scenarios. Once your scenarios are ready, it's time to evaluate them. What will happen under each scenario, and how will it affect your objectives? This is where you dig into the implications. Key methods for analysis include impact assessment. Look at how each scenario could affect revenues, costs, resources, or strategies. Sensitivity analysis. Identify which variables have the most influence on outcomes so you know where to focus. Strategic responses. Think about actions you could take for each scenario. How can you mitigate risks or seize opportunities? For example, if one scenario exposes supply chain vulnerabilities, a response could be diversifying suppliers. The goal is to outline practical steps that can help you adapt before a scenario unfolds. Monitor and review. Creating scenarios isn't a one-time task. The world changes quickly, and so do the factors shaping it. That's why you need to regularly monitor and update your scenarios over time. Here's how to keep them relevant. Track key drivers. Stay updated on trends and uncertainties. Are any evolving differently than expected? Revisit assumptions. Ensure the foundations of your scenarios still make sense. Over time, new data or insights might require adjustments. Incorporate feedback. Use lessons learned from real-world events to refine your scenarios. Think of it as maintaining a car. Scenarios need tuning and adjustments to stay useful. Without regular updates, they risk becoming outdated and irrelevant. By keeping scenarios fresh, you'll always be ready to face what's coming. Applications of scenario analysis. Scenario analysis isn't confined to a single industry or profession. Its flexibility allows it to be applied across various fields where decisions involve uncertainty. Let's explore how it's used in key areas such as corporate strategy, financial planning, and public policy. Business and corporate strategy. In business, the stakes are always high. Leaders need to make decisions that ensure long-term growth while managing risks. Scenario analysis helps companies prepare for uncertain futures by providing a structured way to think about what-if situations. For example, think about a global retailer planning expansion. Through scenario analysis, they might evaluate several paths. E-commerce growth scenario. Planning for a world where online shopping dominates, focusing on digital infrastructure and logistics. Economic downturn scenario. Preparing for reduced consumer spending by optimizing pricing strategies and controlling costs. Sustainability-focused scenario. Anticipating stricter environmental regulations and investing in eco-friendly practices. By exploring these futures, businesses can create flexible strategies. Tech companies frequently use this tool when launching products. For instance, before rolling out a new device, they might assess scenarios like supply chain disruptions or shifts in consumer preferences. This allows them to adapt quicker and avoid costly missteps. Finance and investment. In finance, foresight can mean the difference between profit and loss. Scenario analysis plays a critical role in financial forecasting and investment planning by helping professionals account for market volatility and economic shifts. Here's how it applies. Portfolio management. Investors use scenario analysis to model how various economic conditions like interest rate hikes, inflation, or geopolitical tension might impact their portfolios. For example, they may create a scenario where inflation rises sharply, leading them to favor assets like gold or real estate. Risk assessment. Banks often model extreme scenarios, such as a recession or a stock market crash, to test the resilience of their assets and lending strategies. This is commonly seen in stress testing for regulatory compliance. Budget planning. Companies use it to forecast cash flows under different circumstances. For instance, how would a sudden spike in raw material costs impact profitability? Take real estate as an example. A property fund might test scenarios involving rising interest rates or changing housing demand. The results could shape their decisions on buying, selling, or holding properties. For investors and finance teams, scenario analysis isn't about predicting the future. It's about preparing for it from every angle. Public policy and government planning. Governments and public agencies face challenges that span decades, making long-term thinking essential. Scenario analysis helps policymakers anticipate various outcomes to design effective policies. Consider climate change, one of the largest global challenges. Scenario analysis is integral to creating environmental policies. Governments may explore scenarios like high emissions, estimating the impact on sea levels, agriculture, and public health. Global cooperation, projecting how international agreements could curb emissions and stabilize temperatures. Technological breakthroughs, predicting how innovation could alter energy consumption or carbon capture. Beyond climate, scenario analysis also applies to disaster preparedness. Public health agencies, for example, used scenario analysis during the COVID-19 pandemic to model infection rates and allocate resources like vaccines and hospital beds. Similarly, transportation departments might explore the effects of population growth or autonomous vehicle adoption on infrastructure needs. In defense, military strategists frequently run scenarios to plan for geopolitical conflicts or cyber attacks, ensuring they're ready to respond quickly under various conditions. In each case, scenario analysis provides a playbook for navigating complex challenges. It's not about guessing the future, but staying a step ahead of uncertainty. With multiple paths outlined, governments can act decisively while adapting as situations evolve. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like and share to continue your journey to financial success.